First of all, again, this is kind of a preview of what you'll be getting as a part of the preparation journal for Watch and Trade. So you won't necessarily be getting these types of videos, but if you're a member of Watch and Trade, you will get access to my preparation journal on a daily basis. Everything we're going to go over now regarding Apple and Amazon and Google, I write down in my own personal notebook, which I call the preparation journal, and then I will be taking that and uploading it to the site. So then for yourself as a trader, if you want to get access to my notes and what I'm watching for, you would just click on it and it would take you to that entry. So first things first, Apple today we closed at 425.66 with a range of 424.43 to 435.25 on 16.4 mil in vol. Now, first thing I want to address on Apple is that it traded in a $10 range within the first 30 minutes of the day. Just about $9 range or so. Okay? That led me to believe that Apple was going to trade in a $15 to $20 range on the day overall. I assumed that since it had traded in such a wide range within the first half hour, that indicated that it was going to trade in an even wider range on the day. Now, as the day wore on, that turned out not to be the case, because if you take away the first 30 minutes, you'll see Apple actually just traded in about a $5 range, which is pretty tight. Okay, so I kind of want to see where I went wrong, so to say, in anticipating such a range and identify what might have been an indicator that the range was not going to be so great after all. And where I think I'm going to have to focus is my volume. Because after all, volume is kind of what determines volatility. The more volume that's trading, the more money you have. The more money translates to more participants translates to more decisions, differing opinions, etc., which tends to result in varying, in a greater varying prices. Okay. Now, you had 2.2 million shares trade first 15 minutes, really good. 1.4 million trade next 15 minutes. Again, that's very solid volume for Apple on a 15-minute basis. And then 1.1 million on that third candle. Okay? And then you even dropped off way more, down to 724,000, 775,000. Okay? You compare that to yesterday during those candles, when it traded 1.6 million, then 962,000, 800,000, 1.2 million. So here to me is my answer in terms of what should have signaled to me that the range was going to dry up. And that is the fact that volume dried up. Okay? Volume dropped off. Volume essentially got cut in half on a 15-minute basis. You went from 1.5 million shares, from 9:45 to 10, and by 10:15 that was only 724,000 shares. So my first kind of note that I'm going to make here is going to be based on the volume between 10:15 and 10:30 and 10:30 and 10:45. So just what to watch for. I'm going to focus on my volume between 10:15 and 1045 as kind of an indicator here in terms of range extension, okay? I want to see greater than these two candles here. You had 724,000, 776,000 on the 15-minute chart. Let's see what was going on the 3-minute chart during those candles. 129,000, 178, 259, 147, 160, 167, 85,000, etc., etc. Only one candle on the 3-minute chart greater than 200,000 shares between 10:15 and 10:45. So what I want to watch for tomorrow to signal greater volatility is greater than 800,000 shares, 15-minute volume pace, slash greater than 175K 3-minute volume pace between 10:15, 10:45 to signal continued volatility. Okay? Now, next thing I want to focus on is something that has been coming into play multiple times on Apple. And that is an inability to close greater than $1 above the initial 15-minute open, the initial 15-minute close. What I mean by that is today you closed at 429.95 on the first 15-minute candle. What has been a bullish signal or a bearish signal on Apple is if it's able to close $1 above that first 15-minute close later on. So in this case, it would have been 430.96. Okay. You can see just quickly, Apple was never able to register one of those closes on the 15-minute chart as the day wore on. And as a matter of fact, it got close to it at 11:15, and that ended up being a great short. Okay. Now you go back to yesterday where that first 15-minute close was 424.36, and you see that you closed above 425.37 at 10 o'clock between 10 and 10:15, and you see it was good for another 10 points, 9 points, all the way up to 435. Now you have, what is this, Friday, you have Monday. You close that first 15-minute candle at 426.82. So 427.82 would have been the candle. Never registered a close. Made a move towards it at 10:15. Got rejected. And again, that was a great short indicator on the way down to 420. Then you go to Friday. First 15-minute close, 433.76. So 434.77 would have been greater than $1 above the initial 15-minute open. You have this close here at 434.70. Okay, that was a great short. Another rejection. That was a good short on down to 431. Then you got another close at 434.76. But that's not greater than $1. That is $1, but we need greater than. Okay, and again, more rejections. Rejections up there were great short signals on the way down to 430. So my next what to watch for, and this would go under kind of bullish scenarios, is ability to close a 15-minute candle greater than $1 above initial 15-minute close. All right. Now, want to look at kind of what signaled some low of day, some lows, some bounces. I want to see what signaled bounces and what signaled highs. Okay. So for instance, you've got this bounce here off of 425.71 up to 429. Now, this 3-minute candle right here closed above the prior two 3-minute candles highs off of a low a day. Okay, so here's your low a day, 425.71, and then you got to close that registered above the previous two 3-minute highs. And notice that then translated into, a nice move from 427s up to 429. Okay, prior to that candle, you didn't have anything like it. So that's looking like a potential signal there. You also had this action here that led to a bounce. Again, you closed above the previous 3-minute candle's high. Didn't close above the prior two, okay, but you did print above them. You had a bounce here, but there's no real clear signal there. These two are the only two where it gives you a clear signal, and that signal being ability to close 3-minute candle above previous 3-minute candles high to signal bounce. All right, now let's look at our highs and what kind of signal we might have seen there. Not much, to be honest. Nothing that's super clear. We didn't necessarily break below the previous candle's low. We did fail to make a new high, okay? But we'll find something. So that high was 430.68, and then the next candle closed at 429.59. So you did close greater than $1 off of that high on the very next candle. But again, I don't really like that. That's not a very telltale indicator to me. So I'm going to look at the 15-minute chart instead. Again, not a whole lot that we can gather from the 15-minute chart off of this intraday high from today. So but if you look back at yesterday, yesterday's 15-minute candle, yesterday's action, you can see that this 15-minute candle pierced beneath the lows of the previous two 15-minute candles coming off of a high a day. Let's take a look at yesterday's 3-minute chart and see what that action was. So here's our high, and again you can see it gave up all of those gains. But I'm going to go with that 15-minute signal that we saw yesterday. So I'm going to say 15-minute candle that closes below previous to 15-minute lows to signal high of day. So the main thing, though, is the first what to watch for I touched on, and that's a big volume drop-off on the 15-minute chart to signal that the range isn't going to open up, or if the volume picks up between 10:15 and 10:45, we are going to see range extension. I also want to see just kind of what our total ranges were at 10:15 on the 15-minute chart. So 429 minus 427.39, $1.61 range, and then 428.51 minus 426, 251. And then we had a what looks like a $145 range, and then a $1.46 range. So another thing to watch for after that, the initial half hour, 45 minutes, is can the range exceed $2.51? Because that's something it didn't do today. Okay, moving on to some levels to watch here on Apple. I always like to do resistance levels first. First one I'm going to take is this 426.20 level from the mid-afternoon, late afternoon power hour. Above that, and you've got these highs there. This low at 426.85 to this high at 427.18. So I'm going to go 426.85 to 427.20. Then you have this high at 428.25. These highs, 428.78. And then, 430.25 to 430.68 was really just really 430 is a big level, okay? So I'm going to go 430, I'm going to take these two highs, 430.25 to 430.68. let's see. And this is an ugly first candle. Then you closed yesterday at what, 431? I had a close at 431.16, 14. Here it's showing 431.26 though. So I'll just go 431.15 to 431.26 as resistance. That's from yesterday's closing price. Dissecting today's open. $432.54. And right around here, this 433.12-ish, 433.20-ish level. $434.25. And then today's highs, 435 to 435.25. Okay, so I'm going to do some support now. And there's not a lot, I can tell you that right now. Today's low, 424.43. And then the nice thing about doing these preparation journals is you don't always have to constantly map out your support and resistances. So like yesterday I prepared, and so now I can just go back to what I wrote down yesterday and just write those support levels down. So I've got 424.09, 423.43, 422.17, 421.47, 420.75, then 420, at 419 and 418.66. And then 416.83. I just want to show you guys something really quickly about this 418.66 level, which, you know, I know seems kind of arbitrary, but I consider it the holy grail of supports for Apple. In my opinion, the only thing between Apple at 420 and Apple at 400 is 418.66. If 418.66 breaks, you will see Apple test 400. Let me show you where I'm getting that from. So here's the action. Last year, last January, before the big gap up to 440s, and then, you know, the move to 500, we all know what happened. And this base that you see here between, you know, this consolidation period before earnings, this low right here is 418.66. That's from January 13th. And you'll see that when Apple tried to sell off ahead of the earnings, it held 419.75, held 419.55, okay? Didn't go back below that 418.66 level, but below 418.66, and then the next daily price support is all the way down to 412.67. Well, I'll tell you what, if it goes down to 412.67, it's not stopping there, okay? It'll be too enticing to shorts down there. So I truly believe that 418.66 is the level to really focus a lot of the attention on. Okie dokie. Some bullish scenarios here on Apple. Now, the way I come up with these is pretty simple. You take what the price action was today, analyze whether it was bullish or bearish overall. So, like today it was bearish, as evidenced by the 1.4% drop. And then you try to identify what happened today. And by being aware of what happened today, you can now come up with theories that where if the stock now deviates from what happened today, now you know it has the possibility of doing something differently, such as trading bullishly. So for instance, on Apple, first thing I notice that I'm always going to focus on is the opening price and what is the movement around the opening price within the first 3 minutes. Apple today on a bearish tape, it opened at 434.56, went to a high of 434.56. 435.25. So it only moved 69 cents above the open. So this makes it easy. First thing I want to watch for in terms of potential bullish price action on Apple is ability to move greater than 69 cents above the open. Okay? Also, you can take a day like yesterday, which was very bullish, at least for a good chunk of it, and you can focus on what did it do that day, and then say, well, if it does it again, you know, now I can expect even more upside. And again, notice yesterday, open at 421.47, put in a high of 423.43. Okay, so certainly moved more than 69 cents above the open. All right, yesterday, while it did make a new low during the 933 to 936 sequence, that low was only 41 cents below the initial 3-minute low. Okay, that's compared to today, where your first low was at 433, and then your next low was 432.36, obviously greater than 41 cents. So right away today was deviating from yesterday's open. Okay, so now I can, and the other thing here, notice our closes. We opened at 421.47. We closed that same candle at 421.79. Closed the next candle at 422.60. Back-to-back closes above the opening price. What did you get today? Open at 434.56. Closed at 433.11. Closed the next candle at 432.43. Back-to-back closes below the opening price. This is how I come up with what I'm watching for from a bullish perspective. So, another thing to watch for, ability to close back to back. I just put B-B, back to back, 3-minute candles above open price. Okay? Avoidance of greater than 41-cent move below initial 3-minute low. Just talked about that one. What that is, that's this action here, where your first low 421.16, your next low 420.75. Notice even when Apple pulled back yesterday after this move higher, never did it close below the opening price. Okay? So that's where that's coming from. It was also able to make new highs by 9:39. So that's another criteria I want to watch for. New high of days by 9:39. Pullbacks that hold open price are constructive so long as they don't stay there very long, okay? And what I mean by that is, so you close, you open at 421.47, you had this close at 422.43. You only had one 3-minute candle pullback that resulted in a close within $1 of the opening price, okay? You see what I'm saying here? So yes, you had this close 422.56. That's still greater than $1 above the initial 3-minute opening price. Then you had this close right away, 423.39. That's certainly greater than $1 above the opening price. So that's why I'm saying pullbacks that hold open price are constructive so long as there isn't more than one close within $1 of open price on the 3-minute chart. All right, now in terms of pricing, notice that none of anything I wrote down right there, notice I never said one price level, okay? I never said, oh, it needs to be above, 430 by XYZ or, such and such. I'm going to do that right now, but the reason I do all of these things is to kind of get you to focus on price action more than price itself. Because, for instance, if you were developing a bullish theory, bullish thesis on price itself, Apple moved above 435 right at the open today. Apple moved above yesterday's high right at the open. Okay, so if you only focused on price but weren't focused on price action, then today you got smoked chasing the open. All right, so now I'm going to say, got to get above this 428 high within the first 15 minutes of the day to me. Okay. Above 428 by 9:45, targets 430 to 431 test. 430 breakout, targets 435. Targets 435 on 430 holds. Meaning, if we go above 430, we can't go right back down to 428. You got to stay above 430. Oh, where am I getting that from? Well, here you go. You went above 430 today at 11:24, and 6 minutes later you were back printing 428s. All right. Bearish criteria now. Well, opened at 434.56, put in a low at 433. That's $1.56 below the open. So right away, ability to go greater than or equal to, I suppose, $1.56 below the open price. And then new lows by 9:30, new low of days during by 9:36 by at least 64 cents. I'm getting that from this candle trading down to 432.36 below the initial low of 433. So that's a 64 cent move lower. Okay. When it went, below 430, it was never really able to regain it. So I've got ability to go greater than or equal to $1.56 below the opening price. New low a day by 64 cents or greater by 9:36. That was certainly pretty bearish. And then, after that point, you had rejects at the first 15-minute close. So 429.95, you never sustained a 15-minute close, above it. You only got one 3-minute close above it all day. So I'm going to put also under the bearish scenarios is rejects at initial 15-minute close throughout the morning. All right. Again, that's in terms of price action. You're probably noticing that I don't have as much to watch for on the bearish side versus the bullish side. And the reason for that is Apple as a bearish trade has been a lot simpler than it has as a bullish trade because it's been going down for months. So what to watch for in terms of bearish activity, it's been pretty routine. If it goes below the opening price by XYZ, then it's going lower. Okay? If it puts in a new low after 9:33, between 9:33 and 9:36, then it's probably going even lower. Okay? Now, in terms of price action, definitely got some support in this range here. You can see Apple did a lot of churning in that range, and then that's the opening range. That's 422.30 to 424.50-ish. So I'm just going to put 422 to 424. Breakdown is needed to target 420. If 420 is tested by 10 o'clock, then 415 is in play to me. Also, if it's rejected, above below 428, then that's bearish as well, in my opinion. It just wouldn't be as aggressive. If it's rejected at 428, then 420 to 425 can be a target. But if it can even get back up to 428, then that is kind of going to eliminate the 415 potential daily target. Okay, and then the one that everybody always likes to forget about is neutral. Okay? To me, if Apple is between 425 and 430 at 10:30, then that's a pretty neutral setup on the day, and I wouldn't expect much. So I'm just going to put 425, between 425 and 430 at 10:30. I would expect to close somewhere in that range. Now, in the event of a gap up, I want Apple to show the ability, since it gapped up yesterday, we'll use that as an example. I want Apple to start extending to new high of days by 9:42. 9:39, 9:42. In the event of a gap down, and there's been a lot of those lately, let's look at this action here. So on this gap down, Apple never was able to go above its initial 3-minute high. So gap down, inability to move above 933 high with closes below the opening price. All right, so that's it on Apple. Any questions on that prep on Apple? Well, actually, that's not it on Apple. I always come up with a gut feeling. I think it's very important to write down what your gut feeling is. I think it helps you kind of trust yourself. On Apple, my gut feeling is that if it can't get back above 428, it's going to break below 420. But it has to show signs of a breakdown. It has to show signs of a breakdown within the first 30 minutes for me to be getting aggressive on the short side. Somebody asked if I'll be posting these notes for you guys tomorrow. This video will be posted, so it's up to you to kind of watch it and be taking notes along with me. But again, this is to kind of show you the value in becoming a member to watch him trade, because these are the notes that people will have access to throughout the day, because it'll be uploaded to the site in text form, and you will simply be able to click on the journal icon and have all the access you need. This video will be posted to stockhaven.com. Okay, now I'm going to do Google. So Google closed at 431.38. You guys will notice I don't do nearly as intense prep work on Google as I just did on Apple. And the reason for that is I simply enjoy trading Apple better right now. At some point, you know, when Apple stops offering the opportunities that it's offering, I'm sure I'll trade something else. I'm sure I'll go into as severe detail as I do with Apple, but in the meantime, you know, I do more of a quote-unquote light prep on a name like Google. So first thing I notice on Google that is different from the last few days when it's been making these all-time highs is what? On the 15-minute chart, it didn't hold above the opening price. You see yesterday, open at 829, moved above the opening price right away. Monday, open at 805.30, moved above the opening price right away. Okay. Yesterday, today, sorry, you open at 841, and you know, within the first 3 minutes of the day, it was back below that opening price. So a real key on Google here, just kind of what to watch for, is ability to hold above opening price. Gee, where have we seen that before? You'll notice no matter what stock you're watching, generally, if it can't hold the opening price, it's not going to be a good day for that stock. If it can hold the opening price or stay close to it, it is going to be a good day, or you know, an okay day. I'll show you, for instance, on Salesforce. Salesforce was not really able to hold its opening price today, but it remained, you know, pretty much near the opening price, and it was able to bounce back up and recover. All right. So Google, ability to hold above opening price or remain nearby. Open at 441.24. Put in a high at 844. So it only moved $2.76 above the open. So right away, if I want to get bullish on Google tomorrow, I want to see a greater than $2.76 move above the opening price. What I do kind of like here on Google is you've got yesterday's low at 828.90, and then you got today's low at 828.81. So it couldn't start to fill the gap today. Yes, it did so by about 8 cents, but that's nothing I'm going to really put too much stock in. So today's low becomes kind of that risk-reward trade. where if we can now hold above 828.92, 828.81, then Google is in good shape to hold this gap overall. Now I know some of you, we like to think that gaps like filling. However, most recently Google just showed you it gapped from 702 all the way up to 735, and that gap never did fill. Okay? Again, you also back in November you had a close at 647 and you gapped up to 655, and that gap never did fill either. So the last two gap ups, no, I'm sorry, I'm ignoring this one where you closed at 707, opened at 719, and that gap did indeed fill. So you've kind of got a mixed bag on Google here, where 2 out of the last 3 gap ups have held. So 828.80 is key level. That is kind of the base of the gap. Risk reward intact on 829 to 830 holds. As far as resistance goes, it's 834 to 835 range, held it down all day after the open. Above that, and then you've got 837 to 838. And then, today's high a day at 844. The other thing on Google, when it's made all-time highs, it has traded at least 400K within the first 15 minutes of the day. Today it made that all-time high, but again, it was red, so, wasn't much there. So, need greater than, 400K 15-minute volume pace to upside on potential all-time high targets. All right, Amazon. $273.79. And also, just what I want to say on Amazon and Google, you've got 2 stocks that just had 5-day winning streaks, okay? And then they just had a down day for the first time. Google hasn't had more than a 2-day winning streak, losing streak in over a month. Amazon, last time it went down, it had a 5-day losing streak, okay? However, last time it went up, it had a 5-day winning streak. So tomorrow is a real good tell on Amazon, because if this thing can bounce back into the green, now you have it deviating from its latest losing streak, because you're not going to because if it goes green, you're not having a down day turning into a multiple day losing streak. Furthermore, if it goes green tomorrow, you have traders like myself who are now going to be thinking, last time it went up, it went on to achieve a 5-day winning streak. Okay? You see my point here is that tomorrow, I feel like a lot of people are going to be trusting the direction in Amazon. Meaning, if you get red tomorrow, I suspect you get a lot of people positioning for a 3-day losing streak. Where if you get green tomorrow, I bet you get a lot of people positioning for another multiple day winning streak. All right? So Amazon, first kind of thing that I'm noting is I trust red or green day for follow through into Friday. Follow through direction into Friday. Now, on a from a price action perspective, Amazon today opened at 275.40, put in a high at 276.49. So it was never able to move greater than $1.09 above the opening price. Tomorrow, that's going to be my main criteria. If it can't do it again tomorrow, then that's net bearish. If it can, then it's net bullish. And the bearish price action, you know, it closed below the opening price on the 933 to 936 candle. And then you'll see when it did try to rally here, it never could quite extend beyond the opening price. It never was able to register a close greater than 10 cents above the opening price. Made new low of days. So when it was trying to bounce, let's see, it rallied from a low of day at 271.11 up to 273.60. So that's $1.49 rally, and then that ended up in a new low of day. Then you had this low of day here, 271.83, rally up to 272.78, you know, so less than that $1.49 rally resulted in a move back down to the low. So the point I'm making here is what type of rallies did it do off of the low of day that ended up in a return back to the low of day or a new low of day, okay? So it wasn't until it was able to extend greater than $1.49 above that low a day, which would be 273.36, that it was then able to kind of put that to rest, and you can see that was right here. At 233, once you broke greater than $1.49 above the low a day, you can see that was good for another buck move. Okay, and then you pulled back, a lesser pullback again, and here you are with your close. So just kind of want to watch for pullbacks. Excuse me. Watch for greater than $1.49 rallies as bullish signals. As far as a price perspective, you know, certainly want to stay above today's low at 271.87. And you've got resistance, you know, between 274 and 275. Back above 275, and I suspect you see Amazon make a run at all-time highs. All right, guys, that's it for me. Any Any questions on those things I just covered in regards to Amazon, Apple, and Google? As for questions regarding the new website, you guys should check your emails today. Check your spam folders too. I sent out an email kind of outlining Watch and Trade and what all will go into it. And there will also be more details forthcoming. Okay, so yeah, that's a good question. If Google does start to fill the gap, certainly realistic, and it isn't necessarily bearish. I would say if Google starts to print some, 828 60s or so, then I'd start targeting a move down into that 820 to 825 range. Ultimately, more important support is that gap support at 820. My criteria was kind of in the near term bullish scenario where, I just haven't really liked playing puts on Google lately. And there's a simple reason why. It's called an uptrend. Okay, so I'm not really going to try and get cute and play it for a move from 828 down to 820 because that hasn't been the smart trade on Google. So that's where I'm kind of watching this today's low as kind of the risk reward on the long side, where then if it breaks, I will start to expect more of a deeper move down to 820 before I start getting long on Google again. Just really quickly, why I got puts on Apple within the first few seconds of the day. No extension at all on Apple. Okay, so you compare today's gap up to yesterday's gap up. So yesterday's gap up on Apple, you open at 421.47. Within the first few seconds of the day, you held 421.16. You only moved 31 cents below the opening price, okay, within those first 3 minutes. You were able to move greater to the upside than you were to the downside on yesterday's gap up on Apple. You compare that to today's gap up in Apple, and within the first few seconds of the day, what did Apple show you the ability to do? Well, it certainly didn't show you the same ability as yesterday. Opened at 424.56, traded down to 433.78 and 433.59 within the first 2 minutes of the day. Okay, so it showed you a greater ability to move lower versus higher. Apple moved 78 cents below the opening price and only 69 cents above the opening price. So it favored the downside. That is the main reason why I bought puts within the first few seconds of the day. The other main reason is because my gut feeling that I had written down on Apple coming into today was be ready for a gap and fade if there is no push above the opening price. But if there is a push, then hold off on short. Okay? So main reason is I was fully prepared and I knew what I should be looking for. All right, guys, good stuff. I'll see everybody tomorrow.